to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here as always with Adrian Nicholson. I'm excited for a new episode, a new topic. Adrian, how are you doing?
Doing great. Happy to be back here on the Retirement Lifestyle Show. Looking forward to our topic today, Roshan.
Yeah, I've got an interesting one for us today. It'll be full of our disclosures because stocks, specific companies are definitely mentioned during this. So I'll start us off with that and say this is not investment advice. This is just information to help you with your process and deciding what to do, what to research, what to look into. Please consult your financial advisor. If you need one or you need help with what you're doing, please reach out to me, reach out to Adrian, either or both of us, and we're happy to help. So let's jump right into it, Adrian. I've got a topic for us today to talk about AI, more specifically for everyone that's listening. Barron's had a great article by Tae Kim, that's Taekim, this weekend. It's called The Age of AI is Still in the Early Innings, and these three stocks will keep winning. So there's a lot of good background and information in this. And before we start and as we kick it off, I feel like there's been a lot of talk of, are we in an AI bubble? Is the bubble about to burst, etc.? Adrian, do you have any thoughts on that as we begin?
Well, I do agree with where we're at now. We're still in the early innings of it because AI really came out on the scene, I'd say about a year and a half ago. And I still think it's, still a very new industry compared to some of the longer lasting ones that have been around for a while. So I definitely agree on that. And I always say this previously on our podcast before, whenever a new technology or a new industry or sector comes out like this that grabs investors' attention, there are going to be winners and losers, and try and figure out which ones fit for you, which ones are going to be the winners and which ones are going to be the losers is definitely where the opportunity lies.
Yeah, and when you talk about this, the stage, and Adrian, you had said you feel like it's in the early innings, as the author does of this article. While researching this, I found another stat. This was from a Goldman Sachs article where they had said uh, the number of AI patents have gone up to over 60,000 in 2022, up from 8,000 in 2018. Right. And now, granted, you had mentioned AI really has been the talk for a couple years now. So that's 2022. That lines up time frame wise with what you had said. But just that growth, 8,000 to 60,000, is huge. Let's dive right into to some of the thoughts by the article, and we'll share some of what we have in there. I was recently listening to a great book that for those that are listening and looking for investment books or interesting stories, I will mention this. It's called Reminiscences of a Stock Operator by Edwin Lefebvre. So, and one thing that was in there is they had said, follow where the money's going when you're investing. So, as I was thinking of that and our topic today, I this is where the money's going, right? Into this AI space, or at least the AI infrastructure space. And it said that uh, big tech firms will spend more than $200 billion in capital expenditures, primarily for data centers and to buy chips for their AI models. That's for this year, and those numbers are expected to go up. So that's just going back to following where the money is headed. That's huge, right? That 200 billion, sort of at a minimum. Just saying at a minimum, as in that I think 2025 will be more than 2024. So that there's huge opportunity there.
Yeah, and you think just with huge opportunities, that makes it seem like there's a lot of market share out there where you just mentioned it, Roshan, a lot of new patents are coming out and people are trying to just get their foot in the door in this space and, like you said, follow where the money's going. And then also just startup companies too. I mean, you're hearing that like a new AI startup companies comes out every day, or a new app or a new feature that you can use where people are really trying to, like you said, follow the money by creating new businesses or new investment opportunities. So with that, investors have a lot of opportunities, investments, companies to really comb through just to really see which ones will be here for the long term, which ones are going to be profitable, and which ones may be a good fit for their portfolio.
Yeah, and another thing about AI as well is it seems to be it leading to efficiency as well as the use of data that was not essentially as useful or not really as tapped into. So the comparison on here is that it's increasing employee productivity. I recently, unfortunately, had a client get laid off, and she had said that she essentially created an AI system that put her out of a job, right? And that's that's where you see with things shifting. We had an episode probably 2 or 3 years ago where we talked about those screens that were at restaurants now where you can tap on the like McDonald's, you can tap on the screen to order, and whether that would eliminate employees. And the expectation at the time was that you now have a more sophisticated position of or sophisticated as in higher income position for someone who has to repair those machines and keep it working. I wonder if AI will go in a similar space just because that's what's typical. But businesses will invest in things that will make them more money, right? That's an investment. That's not a cost. So if it's increasing productivity, there it's real, right? In the sense that businesses will be willing and looking forward to putting money in this space because they think it'll make them more profitable.
Yeah, I
The
mean,
other,
looking at
go
it
ahead.
by sector, Roshan, what I'm going to mention too is that example you gave. It's really shaking up, as you could see immediately in the technology space as well, where you're really starting to see companies that if they are utilizing AI a lot more, then that could cause them to starting to lay off some employees that they may no longer need, and that's what you can see happening within the tech space. And that's just one sector. And just seeing how artificial intelligence is really going to impact each sector differently is something that people really just need to look at when it comes to investing. Because let's just say your portfolio is heavily concentrated in one sector, AI might be very beneficial for that sector, but it may not be. And whether you're weighing how much of an impact that's going to be is going to be very important just to see how that's going to perform over the long run for you.
Very true, very true. And when you talked about other areas or other sectors, uh, data centers. The author
Yes.
compares data centers to highways and electrical transmission lines, which create a more productive economy, and that the so it's sort of trickling through, right? You've got these companies that are investing more in AI. Because they're investing more in AI, they need more data centers. Because you've got more data centers, you're now using more electricity and more power, right? The AI data center will require 10 times as much power as the cloud computing data centers do. So you've got exponential growth in this space or in the economy. And you mentioned there'll be winners or losers and pick where you want to invest or end up, but these are just areas worth looking into. Some of the common names like the chip companies for building out the infrastructure, these places that'll be in firms that'll be involved in building out the data centers as well. And then you've got the utilities that have gone up because they've got to provide all the electricity. So you really are seeing this growth and expecting it to continue. So, well, we started out with this. Where are we at? Where are we in terms of the stage? And you had said early innings. Now, once again, not advice, not a recommendation at all. Just some of our thoughts that I'd encourage everyone listening to research. But I have uh, some similar thoughts or similar feelings on as you do that we're in the early stages.
Yeah, and then I'll break it down a little bit more for our viewers and listeners. We talked about this previously too, the value chain. So if you're like, I'm trying to look to see or do the research that Roshan's telling me to do, what areas can I look in? And the value chain is data centers, cloud, and chip manufacturers, where the data centers are the ones where you can see that are warehousing all this technology that's needed to support artificial intelligence application. Then there's the chip manufacturers, which these data centers use to process all this information that's out there. And then there's the cloud computing companies out there that try and leverage this and incorporate it in certain businesses. And that's really where the application feature comes in, where you're starting to see it being used across different aspects and different sectors. So the value chain is definitely a good starting point for you to just get educated on and learn more about it, just to see how this process works, and then seeing what companies, what investment opportunities are out there for you that seem like it's going to be a good fit for you.
Yeah, yeah, I completely agree, and I think part of what we're discussing today is, yeah, not only what was uh, in this article that was very useful, but as you said, areas you can look to as an investor. So just continue on some other numbers. It said that OpenAI's ChatGPT 4 model costs 300 million to train. Um, the next two models are expected to cost billions, uh, and then more than 25 billion for future models. So, from what I'd said at the beginning of, where the money is headed, the money is definitely going here, right? So the money is moving over to that space. Uh, the next comparison he has, or data point, is just Elon Musk's company, XAI, which they deployed more than 100,000 um, NVIDIA Hopper graphics processing units, GPUs, which costs over billion, which cost several billions of dollars, and they expect to double their capacity in the next few months to 200,000. So you've just got so much money in the space. Um, Oracle announced that it'll have the largest GPU cluster in the first half of 2025, with up to 131,000, once again, NVIDIA GPUs available. Meta Platforms, Zuckerberg announced that Llama 4 will have over 100,000 NVIDIA GPU processors. The Llama 3 model had 16,000. So you just see the use, the cost, all continuing to go up with what I'd started out with. Now, that book I had mentioned, they say it's based on Jesse Livermore, a famous stock trader, and following the money's being spent here, and it seems the expectation is that it's going to continue. So as long as that continues, that makes me feel like, one, that we're in the early stages, but also, said differently, or thought of from a different perspective, is, are we in some kind of bubble, right? And if we are in some kind of bubble in the AI space, is it going to burst? And so if the spending is going to continue at this rapid a pace, I don't see the bursting happening. Disclosure time again. Once again, it's not advice. Please talk to your advisor. But Adrian, I'd love your thoughts on that. So you had mentioned already early stages. Uh, do you think we're in a bubble that's going to burst? Your earlier answer may have answered it again, but I'm going to ask anyway.
So my thoughts are is you are seeing it a little bit, where you are seeing some companies that are AI focused that are doing extremely well, or were doing extremely well at the beginning of the year or last year, but their stock price has come down significantly, but some haven't. So again, this is by case basis, where some AI companies are still doing very well. Their stock prices are near all-time highs for them, but some aren't. So you could say that the bubble, there's many bubbles that are starting to pop, and you've seen this already. The other thing, which you talked about too, is just showing that the demand is there and the spending is happening, and you're actually seeing that through the markets right now and through these artificial intelligence business. And something that you have to consider as an investor is that demand going to constantly be met? Are those chips going to still be made? Are these data centers still going to be run as efficiently as possible? Are these cloud companies going to continue to support all these other businesses and investment opportunities that they're a part of? Is that going to continue? Because one thing I think that you really have to consider, as far as just the risk out there, is just any abrupt in the supply chain, any disruption in the supply chain could really have a significant impact as well. One thing you can just think about too, tariffs too, that's a conversation as well, how that can impact this market. So there are risks out there that you need to be aware of, and just see if that's something that, is a cause for concern, then you may stay away, or something that you say, you know, the AI demand, it's just going to be able to get past that, then that's also something too that you have to make a decision on. So that's my initial thoughts so far. Do you see something similar out there, Roshan, or comment on anything that I've brought up so far?
Well, no, I love that you brought it up because I think the what I have today is more the bull case of this, and I think that those risks really need to be noted, right? Like the one that you said that stands out to me is the tariffs of all of them, right? There are uncertainties, but as you mentioned, that the tariffs, and my response to that is more than likely that cost will be passed on, right? So we're going to look at continued or more spend in this space. The people spending the money, these tech firms, have the money. So it's not like you're dealing with firms that can't afford to do so. Once again, they're seeing productivity go up and use go up. So just a couple things, and this was a quote. Well, the source is Arthur Lewis, president of Dell Technologies. I'm not going to give the quote, but what he was saying is that um, they're able to take data now, analyze it, and making it useful for businesses, right? So those businesses can actually use the data. At Meta, Mark Zuckerberg told investors at his call that there's been an 8% increase in time spent on Facebook and 6% on Instagram, uh, and then more advertisers are using their AI tool to create ads, which is a 7% increase. So if you're a Zuckerberg at Meta and there's a tariff and the price goes up, I don't think you hesitate on spending. The other thing that you mentioned out there is supply chain, which I do think is also a real risk. I just think that's a short term risk, right? Because if supply chain slows, this may have been last summer or it may have been earlier than that, but there was talk of how there was a shortage of the AI chips, and there was then a secondary market where firms that had contracts that were getting their AI chips fulfilled were selling those chips at a profit to other firms. So I think that supply chain issues can create the secondary market. Now, if you're invested in a stock that has this, you will likely see a decline. But I think it very well likely might be a short term decline because eventually those chips will come to market, right? It may not be at the rate. It may open the door for competition. Maybe you think you've got the best player in the space. They have supply chain issues, and someone else overtakes them. So I think they're real. Those are real risks, and glad you brought them up. And I think selecting the right company is an important part of this process.
Mm-hmm. Yeah, and then something else that comes to mind, what you mentioned, how people compare this to the dot com boom, but around the dot com boom, one of the companies that's still around to this day is Google, and they were still a very early player that nobody really paid attention to. So maybe some of even the best AI companies are nobody even knows about right now. Maybe that's also a possibility as well. It's just such a new space, still in the early innings, in my opinion. That's why you just got to stay vigilant and just keep doing your research on this as well, so you can just have whatever advantage you can get.
Yeah, I agree. You definitely need to stay vigilant. Do your research, constantly monitor it because it can change rapidly. There was a section where they have quotes, and I want to share. I shared what Zuckerberg said, not necessarily quotes, but information from multiple companies. I want to share a few more. So, John Lynn, executive vice president at Equinix, says that this is a uh, fundamental materials discovery, drug discovery, improvement to health is the potential. He said, and then Bristol Myers Squibb, they purchased they purchased NVIDIA's AI system a year ago, and they're saying that it's accelerated our capability, finding new medicines and tackling real challenges. I'd heard someone else mention this. I can't remember who it was, about a year ago, how future medicines will be discovered via AI. Andy Jassy, Amazon CEO, said the business is on track for multi-billion-dollar revenue and doubling its growth rate and surpassing early stages of Amazon Web Services. Satya Nadella of Microsoft has said that AI business is on track to exceed 10 billion, making it the fastest business in their history to reach the milestone. Sundar Pichai from uh, Google said that a quarter of their code is being generated by this. So they're all seeing the uses. These firms are all increasing money they're spending in that space, with Alphabet up 62%, Microsoft up 51, Amazon up 51%. Meta said they'll spend 230 billion in this space. So once again, following the money, there really does seem to be a huge opportunity. And Microsoft said they're currently capacity constrained. Right. So going back to what we said, I don't money's being spent in the space. It seems to be being spent intelligently because it's making the businesses more productive. Those businesses are growing, which would lead to more money being spent in the space. So I definitely see great opportunities here. The concern that I have, and Adrian, give me your thoughts on this, is just that you've seen a lot of these companies and these stocks, they've run up already. So my thought with this is constantly, am I too late, or is it going to keep growing at this pace, right? And so once again, this article is very bullish, and it seems to be saying that you're not too late, and I'll have some more numbers for you. But what are your thoughts on that? I feel like I'm asking the same question different ways, but Adrian, please, what are your thoughts?
So when it comes to just being late or not, I think again this just really comes down to we're in the early innings. You have to take it definitely by company basis because there are going to be companies that are going to continue to do well in the space, and there's some that might not be efficient or might not capitalize on the trend that's going on, and they might not be a good investment. But you making that decision on which way you want to go is really what's going to be the game changer. And then what I kind of want to touch on too, as far as something I think that might be positive, is if you just take it back to 2020 and 2021, because again, a lot of this artificial intelligence has significantly impacted the technology space. And what do we know that happened in 2020 and 2021 to the technology space? It just grew exponentially. They hired a lot, they spent a lot of money, they just grew. And then 2022 started with higher interest rates, inflation going on, and these technology companies really focused on optimizing their business strategies, becoming more efficient, reducing their labor costs. And then as soon as they did that, that's when you started to see artificial intelligence come onto the scene. And I think that's a good formula where these companies started to say, hey, we need to become a lot more efficient, focus on costs, really just improve our business models as much as we can. And then you add artificial intelligence on that, where it really just fuels their growth again. It's something that I think came at the right time for these technology companies. But like you said, you have to be aware because some of these might grow again to that level that they're at in 2020 and 2021 and become inefficient. And you could kind of just see this boom and bust cycle. But the companies that are really just trying to focus on profitability, growing, and leveraging this technology, that's just a really winning formula for any type of businesses out there, where if you find that business, no, you're not too late to answer your question, Roshan. This is a good opportunity.
And I, with what you had just said, with this is a good opportunity in early stages. Another quote now: CEO Jensen Huang, he's got a dog in the fight, so he's Nvidia CEO, but he said that we're about 150 billion into a $1 trillion data center transformation process. So that would argue similar to what you had said, Adrian, about it being in the early stages. And uh, the more I see, hear, and read about this, the more excited I get for the opportunity that's out there. Simultaneously, I do get concerned because they always say don't ever believe when you hear that this time it's different. And I don't know, and I caution from saying that I'm not saying this time is different. I get concerned when I feel like other people are saying it, and the constant comparisons we get are to the tech bubble and why this is different. So I may be conflating two issues that don't line up, but that's a cause for concern. I think when that's the talk, but the things that are pointing out how different it is, um, just as an example, and this is from Goldman Sachs research, when they're comparing the tech bubble, the Bag Seven, the Japan financial bubble, and the Nifty 50 bubble, and the PE ratios of the Magnificent Seven. And I'm trying to see the exact date. They have 2024 written on here, but I believe this was as of September. But that a forward PE was 23.9 versus the tech bubble was 52. Japan's financial crisis was 67, and the Nifty 50 was 34.3. Right. So I think a lot of our theme today is there an opportunity, and are we too late? And that's just another data point where they're saying, okay, you're not too late. But once again, my concern is that are we trying to find things that show we're not too late, or are we actually not too late? A couple other things I just want to point out that I found very interesting in this article is he referenced a valuation metric to see whether what the stock's value is, and he says you forecast the earnings power out 2 years and multiply it by 25. And the uh, Lone Pine Capital's founder Steve Mandel uh, told analysts that that's what he uses, right? And so if you use that metric, it actually says that some of these companies do have some upside, right? And the author in the article, take him, as also argues that he thinks some of their numbers, some of their projections are understated, which means there might even be he believes there's a greater opportunity there as well. So the growth that some of these stocks have had, like Nvidia shares like tripling over the last year or so, um, that level of growth may be gone, but you still may have outperforming market um, growth available with these companies as well. So the three companies he names in here that I'll share with you that I'd say go ahead and research for yourself are Nvidia, Vertiv, and Oracle. That's what the author thinks the best plays are. And once again, as I said, not necessarily I'm not saying to invest in these. This is not advice. Do your research. Talk to an advisor. Talk to us if you need help. But I thought we should share the names that he mentions in there. But that's where he thinks you go if you want to try to take advantage of this space. Start your research on those companies. But yeah, in conclusion, Adrian, I think you and I are in agreement that we think there is an opportunity potentially in the AI space, and still an opportunity for investment in the AI space.
Yeah, definitely, Roshan. And then I think another good point just to add on this, if you do find an opportunity out there, like we've talked about on multiple podcasts, what kind of discipline or principles do you have in place? What kind of protection do you have in your portfolio for this? And is that something that you're going to continue throughout this investment journey, so to speak, in the artificial intelligence space? You feel like this is a good position for you? Because again, that's one of the most important things too, because let's just say we are in the early innings and there's going to be a lot of growth. Great. There's nothing to worry about. But what if you did find an opportunity out there that might not pan out in the future? You having the right risk controls on it and having a discipline just to control whatever happens with this investment is very vital, not only for investing now in artificial intelligence, but any other opportunities that you come across in the future.
Yeah, I completely agree. We hope you found this episode helpful. This has been another episode of the Retirement Lifestyle Show. Please like, subscribe, give us 5 stars, take control, and achieve your goals.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.